Recording. All right, folks. It's great that you're with us today. We are so excited. Hopefully, you're staying warm. I guess we got a cold front coming. We were saying how teachers are probably doing like the snow dance right now. And really excited that you're with us to have a little bit of fun with finance, specific to kind of teaching about taxes. We have an amazing featured speaker here tonight. And for those of you that are joining us for the first time, Barker Center Teacher Training, welcome. For those of you that are rejoining us, great to see you again. And my name is Dr. Brad Baguth, professor in the School of Education, and I have the pleasure to serve as the executive director of the H. Kenneth Barker Center for Economic Education. Also, I'm joined by a really wonderful student here. It's going to be helping us out tonight, Addison.
Yeah, hi everyone. I'm Addison Smith. I'm a recent hire at the Barker Center. I'm a student employee. I've been at the university the last 3 years. I'm currently studying to be a high school social studies teacher and am also majoring in history. During this meeting, we ask that, in the chat, feel free to introduce yourself, throw in school you work out, any title or institution, and we ask that you turn off your cameras and mute yourself for the meeting. But we'll be monitoring the chat throughout the meeting. And so if something comes to mind that you want to ask, feel more than inclined to put it in the chat. And yeah, that's a little bit about me. And about the Barker Center. If you don't know about the Barker Center, we're a nonprofit and we're dedicated to assist the local community and other communities at large about financial education and financial literacy. We provide training and resources for K through 12 teachers for said financial literacy and education. Some of the main ways that we do that is through seminars like this. So there's a lot of events that we hold to help out teachers.
Hey, so one of the really great things about all of the programming in the H. Kenneth Barker Center for Economic Education is it's connected to Ohio learning standards in financial literacy, the new standards. I know a lot of folks are excited about Senate Bill 1 and the new mandate surrounding financial literacy for high school students to graduate, and then the teacher educator license validation. But everything we do is connected to Ohio financial literacy standards. Today's session kind of really zeroing in on the topics of financial responsibility and decision-making, and obviously financial planning and money management. Before we introduce our featured speaker, I wanted to just share some stats I came across from the Treasury around the work that the IRS is doing around taxes. And it's really impressive when you think about it, the number of tax returns that were processed in 22-23 year, those that were done by tax professionals, those that were done by individuals, the amount of the returns, because 'tis the season, right? As we all get ready to put together our taxes, get that information, that documentation ready. And we have a pro with us tonight, joining us tonight, and really excited about this.
Yeah, this afternoon, we're joined by Dr. Melanie McCoskey. She joined the University of Akron in 2014. She received both her undergrad and her PhD degrees at the University of Georgia. Her professional experience as a CPA was at Arthur Andersen in Atlanta, and she has published numerous tax journals, including the Journal of Legal Tax Research, Tax Notes, Florida Tax Review, in the Journal of Taxation and Others. So yeah, let me get out of the way. And without further ado, our speaker, Dr. Melanie McCoskey.
Thank you so much, Addison. I will now share my screen with you, and we're going to talk about taxes, teaching taxes especially. So our learning goals for this session, after completing this session, participants should be able to identify different types of taxes, understand the different types of credits available to individual taxpayers, explain the process for completing a simple tax return, and identify helpful resources. So there are several different types of taxes that we want to discuss. We'll discuss sales taxes, employment taxes, which consist of Social Security taxes and Medicare taxes. And then we'll talk about income taxes, which can be assessed at the federal, state, and local levels. So first will be sales taxes. These are taxes on most goods and services. A big exception in Ohio is food eaten off-site, but there are many, many other exceptions. So the tax rate, the state of Ohio sales tax rate is 5.75%. Summit County adds another 1.0% on top of that. So the total sales tax rate in Summit County is 6.75%. So an example here, let's say Tommy purchases new clothes that cost $100. His sales tax is equal to the cost of the merchandise multiplied by the tax rate. His total sales tax is $6.75. So the total cost of his purchase is $106.75. Now, sales taxes are considered to be a flat tax, which is sometimes called a proportional tax, because as the tax base increases, the tax rate remains the same. So no matter whether I buy one pair of jeans at $100 or 10 pair of jeans at $100, the tax rate is going to be 6.75% on the total cost of the purchase. And then when students start working and they get their first paychecks, they will see that they have to pay employment taxes. So employment taxes, they're sometimes called FICA taxes, which stands for Federal Insurance Contribution Act. And that consists of two taxes: Social Security taxes, which is sometimes referred to as OASDI, Old Age Survivors and Disability Insurance, and Medicare taxes. The employer pays half of those taxes and the employee pays the other half. And the employee pays that other half by having the taxes withheld from their paycheck. So if we look at the total tax rate, the Social Security taxes are 6.2%. The Medicare taxes are 1.45%. So the employee's portion of taxes on their wages is 7.65%. So let's say that my gross pay for the period is $1,000. My employer withholds my portion of Social Security and Medicare taxes. So my gross wages are $1,000. The Social Security and Medicare tax rate is 7.65%. So the total Social Security and Medicare taxes that will be withheld from my paycheck are $76.50. So my net pay is only $923.50. Now, keep in mind that my net pay may further be decreased by federal, state, and local income taxes. Now, these Social Security taxes, these employment taxes, those are not refundable when the taxpayer files the tax return. So many first-time wage earners will say, oh yeah, taxes were withheld from my paycheck. But when they look at it, it was those FICA taxes, those Social Security and Medicare taxes that were withheld, not federal income taxes. So students sometimes get those confused, but they're never going to get a refund of those employment taxes. They may get a refund of their federal income taxes withheld. So it's important for them to understand the distinction between having employment taxes withheld and having income taxes withheld. Now, if we look at income taxes, these are based on income, like salary and wage income, interest income, self-employment income, things like that. These are imposed at the federal, most states, which Ohio does have one, and a lot of local entities will impose an income tax. So if we look at the federal income tax for a single filer here, for a single filer, the tax rate is 10% on the first $11,000 of taxable income. Then between 11,000 and 44,725, so about 33,725, that next amount is taxed at 12%. Then the next increment is taxed at 22%. Then 24%, 32, 35, and 37%. So these are the 7 tax brackets we have at the federal level, and they increase as the income increases. So this is for a single filer. If you look at married filing joint, it's going to start off at being half of that, at being double that amount. So being double that amount. So 10% was on the first 11,000 for a single filer. It's on the first 22,000 for married filing jointly. Although these numbers don't continue to be doubled all down through there, but the rates are still the same. The 10, 12, 22, 24, 32, 35, and 37% rates. And then if you look at Ohio, they don't even start taxing your income until $26,050. So if you earn $15,000 of Ohio taxable income, your tax liability will be 0. But you can see the rates are 0%, then it goes to 2.75%, 2.75%, then 3.688%, and finally maxes out at 3.75%. So this federal and the Ohio taxes, those are considered to be progressive taxes because as the tax base increases, which is taxable income, the tax rate increases as well. Okay, so these are not a flat tax, these are progressive taxes. Now, local income taxes, those are based only on wages and business earnings. So if you have some interest income or dividend income, that's not going to be subject to tax at the local level. Once again, local income taxes are a flat tax. The rate varies by city. The city tax rate for Akron is 2.5%. For Cuyahoga Falls, it's 2%. And most townships don't have an income tax. Okay, so any questions so far on types of taxes, sales taxes versus employment taxes versus income taxes? Any questions, Addison? Can you see any of those coming through?
As of right now, I don't see any questions.
Okay. Okay. And then one thing I wanted to point out, I'm going to go over tax credits, but tax credits are different from a tax deduction. Say like you put money into, your regular IRA. And so you get a tax deduction for that. So that reduces your taxable income dollar for dollar. But a tax credit will reduce your tax liability dollar for dollar. So in general, a tax credit is more valuable than a tax deduction. So let's look at some different types of tax credits that individuals may see. First of all, these credits can be either refundable or non-refundable. A non-refundable credit means you can use that credit only to the extent that you have a tax liability. And I've got an example of that coming up. A refundable credit means you can get a refund amount even if it exceeds your tax liability. Now, most credits are non-refundable, but for individuals, there are 3 refundable credits. That's going to be the earned income credit, Some people call that the Earned Income Tax Credit. Part of the American Opportunity Credit, which is an education credit, and part of the Child Tax Credit. So let's look at the distinction between a refundable versus a non-refundable credit. So let's say Jim and Tammy have taxable income of $35,000. Their tax liability is $4,418. They have a credit totaling $5,000. If that credit is a non-refundable credit, they can use that only to offset. They can use that credit to offset only their tax liability. If, however, the credit is refundable, they use it to offset their tax liability, and then any amount is refunded to them in the form of a tax refund. Okay, so now let's look at the specific types of credits. First is the Earned Income Credit. Factors that are used in computing the credit are the earned income, so wages and self-employment income. And the way the Earned Income Credit works is it's there to encourage individuals to work. So it increases as income increases, and then it sort of peaks. And then as income continues to increase, it decreases. So sort of like a bell-shaped curve. The credit increases, then reaches a maximum, then starts to decrease. And it's based upon the number of children that you have claimed on your tax return, either 0, 1, 2, or 3. And also you can have a very limited amount of investment income, like interest and dividend income. And the Earned Income Tax Credit is one of those credits that's fully refundable. But if there's an age requirement, if you don't have a qualifying child, then you have to be between ages 25 and 65. So when you're teaching your students about the Earned Income Credit, assuming they don't have children, most of them are not going to be eligible for the Earned Income Credit because they have to be between ages 25 and 65. They also can't be claimed as a dependent on someone else's, like their parents' tax return. But if someone is eligible for the Earned Income Credit, if you have 0 children, the maximum amount of the credit is $600. If you have 1 child, the maximum credit is almost $4,000. 2 children, it's $6,604, and 3 or more children, $7,430. And you can see, the maximum income is pretty high on that, but it's going to peak at lower levels than these maximum amounts. But the Earned Income Credit, it's there to reduce some of the regressivity of the employment taxes. And then it also is there to lift a lot of people with children out of poverty. So the Earned Income Credit is really beneficial for those who qualify for it. Then we have the Child Tax Credit, which is $2,000 per child. Now there is talk of that being increased. Congress has until the end of January to make changes to the tax law that are effective for this prior 2023 tax year. But the child tax credit is $2,000. $1,600 of that is refundable and $400 is non-refundable. Eligible children have to be U.S. citizens. They have to be claimed as a dependent on their parents' tax return, and they have to be under age 17. So this is going to max out pretty quickly as the children get older. Then we have education tax credits. There are 2 of those that are available. First is the American Opportunity Credit. It was previously known as the Hope Scholarship Credit. And then the Lifetime Learning Credits. Both of those credits are available for qualifying tuition and related expenses. Books and other course materials are eligible for the American Opportunity Credit, but not the Lifetime Learning Credit. And then room and board, so dorm costs and meal plans, are ineligible for both credits. Each of these credits is phased out for higher income taxpayers. Now, the American Opportunity Credit is available for the first 4 years of post-secondary education, and the maximum is $2,500 per student. It's 100% of the first $2,000 of tuition and expenses, plus 25% of the next $2,000 of tuition expenses. This is on a per student basis. After you max out the American Opportunity Credit, you go to the Lifetime Learning Credit. That's going to apply on a per tax return basis. You can take a credit equal to 20% of the qualifying expenses up to $10,000 per year. So the first 4 years of college are taken care of through the American Opportunity Credit. And then after that, it's the Lifetime Learning Credit. So who's eligible for these credits? It's going to be the taxpayer spouse and taxpayer's dependents. So if a student is still claimed as a dependent on their tax return, it is their parent who takes the American Opportunity Credit, not the student. And then to be eligible for the American Opportunity Credit, the student must be at least half-time for at least one academic term during the year. Now, when a student receives scholarships, those reduce the amount of the expenses that are eligible for the education credits. So let's look at an example of this. Let's say Eric has the following for his junior year in college. He has tuition and fees of $4,000. He has scholarships of $2,000, books for $1,000, and his room and board is $3,000. So for the American Opportunity Credit, his total qualifying expenses are the tuition and fees and the books. The room and board does not qualify. So his total qualifying expenses are $5,000. Then you have to reduce that by the $2,000 scholarship that he received. So his total qualifying expenses for the American Opportunity Credit are $3,000. So the credit is 100% of the first $2,000. So that's $2,000. And then 25% of the remaining $1,000 for $250. So his total American Opportunity Credit would be $2,250. And if he can be claimed as a dependent on his parents' tax return, then they are the ones who claim this credit. Then there's also one that I want you to make your students aware of. It's the Savers Credit. So here you can make eligible contributions of up to $2,000 to a savings plan. This can be a retirement savings plan. But when you do that, when you put money into your retirement plan, that money is not taxed in general. And then the government will give you money back as it's a non-refundable credit. But if you put the maximum $2,000 and you're eligible for the 50% credit, you can get a credit of up to $1,000 on your tax return. To qualify for this Savers Credit, you have to be 18 years old and not a dependent of another taxpayer or a full-time student. So if your students are going to go out and they're not going to go to college, they would be eligible for this Savers Credit right away. Now, we've talked about whether your parents can claim you as a dependent on their tax return or not. There are 4 tests that have to be met for your parents to claim you as a dependent. The first one is the relationship test. So you have to be a son, daughter, stepson, stepdaughter, things like that, relationships like that. You have to live with your parents for more than half of the year. Now, while you're away at college or in the hospital or things like that, those don't count as living away from your parents. So if somebody lived in the dorm, that's still considered as living with their parents. The age, they have to be under age 19 or under age 24 and a full-time student. And then the support test, the child can't provide more than half of his or her own support. Okay, so those are the 4 tests, and you have to work with the students to know whether their parents can claim them as a dependent on their tax return. Most times they can if they still live with their parents because they're not paying more than half of their own support, which is, they're part of the rent or the mortgage, their housing, the utility bills, all kinds of things like that, cell phone bills and that. So only if a child provides more than half of his own support can he claim himself, which means his parents cannot claim him. Now, if the parents cannot claim the child as a dependent on their tax return, then if you're single, the amount of the standard deduction is $13,850. So the standard deduction is, in general, you take the higher of the standard deduction or itemized deductions. So most people, about 95% of the people, take the standard deduction. Itemized deductions include things like medical expenses, home mortgage interest, property taxes, and charitable contributions. So if you cannot be claimed as a dependent on your parents' tax return, then the amount of the standard deduction you get, which offsets your income, is $13,850. And these amounts are always indexed for inflation from one year to the next. That's why you see those changing. But if you can be claimed as a dependent on your parents' tax returns, then your standard deduction is the greater of $1,250 or earned income plus $400, but it can never be more than the regular standard deduction that we looked at over here. Okay, any questions on the credits or whether your parents can claim you as a dependent on their tax return?
Melanie, I was just kind of wondering with the tests that you outlined, do all of those conditions all 4 of those conditions have to be met? And I was just thinking if there's a situation where there's a kid that's living with their parents, maybe they're paying rent, they're paying for more than half of their expenses, just in like a unique situation like that, is it that all 4 have to be satisfied?
All 4 have to be satisfied in order for your parents to claim you as on their tax return. So if you're living with your parents and you are paying rent and you're paying for your own food and your own utilities, your own car, cell phone, then your parents cannot claim you and you would claim yourself.
Thank you.
You're welcome. Okay. Now let's take a look at preparing a simple tax return. So here it's going to be a 1040 tax return. I've pulled the one for 2023. That's what we're working on right now for calendar year 2023. And first, they put in their name and their middle initial, and then they put their last name in, and then their social security number. They'll put in their home address, being sure to put in the apartment number if there is one, city, town, or post, city, town, or post office, your state and your zip code. Most people, I wanted to draw attention to this, the Presidential Election Campaign Fund. It says check here if you or your spouse, if filing jointly, want $3 to go to this fund. So here, most people just leave that blank. They don't check that box. If they do check the box, it doesn't change the amount of their refund. Then we'll look at their filing status. They're going to be filing as single. They'll file as a single generally. The other filing statuses that you might see are married filing jointly, married filing separately, head of household, and qualifying spouse, but most students will be single. You do have to answer the question, at any time during 2023, did you receive as an award, reward, or payment for property or services, or sell, exchange, or otherwise dispose of a digital asset? So did they have any virtual currency transactions? That does have to be answered yes or no. And then here's where it's really important. If their parents can claim them as a dependent, it's very important that they check this box, because if they don't, it's going to mess up their parents' tax return. So if they can be claimed as a dependent on their tax return, they do have to check this box. Okay, then they're probably not going to have any dependents. And then what you're really going to see is for their income is going to be the total amount from Forms W-2, box 1. So you'll see that they'll put their W-2 wages there. They're probably not going to have household employee wages, tip income, Medicare waiver payments, taxable dependent care benefits, employer provided adoption benefits, wages from an 8919, other earned income, non-taxable combat pay, but then they would put in the total. So mostly they're just going to see an amount on box 1A where they put their wages, and they would, if they have more than one W-2, they just total those from box 1 right there. Then after that, they probably don't have any interest or dividends or IRA distributions, pensions and annuities. Now, I did want to mention Social Security benefits, and I put this in yellow because a student may get Social Security benefits, like if a parent has died. That is not included on their tax return. That is not taxable. This Social Security benefit line is for retired people who receive Social Security benefits. So if you do have a student who receives Social Security benefits, that does not go there. Then they probably don't have capital gains and losses from selling assets, additional income. So they're probably just going to go down to line 9 and add boxes 1Z, 2B, 3B, 4B, 5B, 7, and 8, okay? Which in general is probably just going to be still their W-2 income. Then this is where they would take the standard deduction. Well, here, I guess I forgot that. Their adjustments to income, they probably don't have that. Then this is their adjusted gross income. Then they have the standard deduction. So if their parents can claim them as a dependent, then they're limited to their wages plus $400 for the standard deduction, but it can't exceed the regular standard deduction for somebody who can't be claimed as a dependent. Then you're going to get to your taxable income, and this is the bottom of page 1. Then next, on the top of page 2 is where you compute your tax. And normally you would look in the tax tables, or most likely these students are going to be using tax software. So that's just computed for them. They usually don't have any other taxes. So their total tax is just the tax on their wages. They probably don't have the child tax credit. So they're just going to add their credits. 19, and this should actually be moved down one line there. I don't know if I can do that there, but subtract line 21 from 0, then it's going to be your total tax. So usually it's just a tax on their W-2 income. You're just subtotaling down here, and that's their total tax liability. They usually don't have any other taxes like self-employment taxes, and they likely don't get the child tax credit. Okay. Because that child tax credit is if they have a child, so their parents might claim that. But then we go down and look at payments. So you're going to first put in their federal income tax that was withheld from their W-2. Then you get that subtotal there. They usually won't get the earned income credit because with no children, you have to be over age 25 or at age 25. But I just wanted to point that to you here. The American Opportunity Credit, if they can claim that rather than their parents, they would put that right there. Then you get your total payments from that. And then we look down, this is where you're going to show their refund. If they have a refund, and they can have that direct deposited into their checking account. You know, the IRS is supposed to match the name on the refund with the name on the checking or savings account. So I don't recommend students having it direct deposited into their parents' checking account. If they're going to get a refund and they don't have a checking or savings account themselves, then I just recommend them getting the check and cashing the check. If by chance they still owe an amount, you would put that down here, and they do have to sign down at the bottom. Okay, any questions on that? This has gone by a lot more quickly than I thought I would because we don't have any questions.
I have a question.
Okay.
So obviously for like 16 and up, high school students working, and then other young adults, like filing taxes can be a daunting thing. Working as like a CPA, have you found any common trends within like younger populations and mistakes they often make, or do you have a word of advice for somebody that hasn't done taxes before going into doing taxes? Like, do you think they should go towards a professional, go towards TurboTax, things like that?
I think they should, go to a TurboTax if you haven't filed taxes before. And I put that here. If your income is below a certain level, you can go to TurboTax and do your tax return for free. That's using a software site, and you can have your tax refund direct deposited. There are also websites on the IRS government webpage where you can do your tax returns for free. Now, what I've seen in, I guess with students, the biggest mistake they make is not saying that a parent can claim them on their tax return. If they forget to check that box and they file their tax return before their parents file their tax return, then the student has to amend their tax return, and the parents have to mail in their tax return rather than e-filing it. So determining whether you can or can't be claimed as a dependent on your parents' tax return is one of the most significant areas for concern when you have students preparing their own tax returns. Now, there are local VITA sites, which I'll show in a second. This is Volunteer Individual Tax Assistance, which is, we have this group in Akron. It's run by the Community Action Center, and they do tax returns for free. So federal and state, you can go there, and most of them you can make an appointment. You can go to just irs.gov if you have questions. There's a wealth of knowledge there at irs.gov, but I would certainly recommend using a tax service. If you don't use the free service from the VITA sites, then use one of the free ones where you prepare it yourself. But I definitely want to say you need to look at the tax return. Just don't input the information and think it's right and go ahead and click submit. You need to pull up and look and see on line 1, does that match your total wages from your W-2? I had a woman one time where she accidentally in TurboTax put in her W-2 twice. And then she said, can I fix this? And I said, yes, but it's going to take a long time. And it did take her about 1.5 years to get that fixed. So you definitely, if you're doing this yourself on one of these free software sites, you have to look at the tax return and make sure that it's right, that you haven't entered anything incorrectly. You know, your federal income tax withheld, that's another big item that you want to make sure you put into the software right, because that will determine whether you're due a refund or you owe additional tax. Even when you're inputting your W-2 in this software, it's going to ask you for the employer's EI number. And you have to make sure that's right too, or else the tax return gets rejected. So, you know, if you're first preparing your very first tax return, you might want to go to one of these local VITA sites. I also recommend that the students' parents go to these VITA sites because you don't want people paying for something that they can have done for free. And all these preparers at these VITA sites are specifically trained by the IRS to prepare accurate tax returns. But if they do their taxes themselves, they have to make sure before they click submit that it looks like they think it's supposed to. Does that answer your question, Addison?
It answered it perfectly. Thank you.
Okay, okay.
Melanie, can I ask, I was kind of curious about, if there's any disadvantages associated with direct deposit. And I was just thinking, so for instance, if there's future tax liabilities and them having, like the IRS having checking account, your checking account number, or there's this skepticism sometimes
They
when
will never reach into your checking account and pull out money. They will never do that. So you can be comfortable giving them your checking account and your routing number, and account number. I think that's fine. That's definitely safe. If you type in the number wrong, you're going to get a paper check instead. And like I said, I'm pretty sure that if the name on the checking account and the name on the tax return don't agree, then you're going to get a paper check instead. But you don't ever have to worry about the IRS reaching into your checking account and snatching something. If you hadn't paid your taxes for many, many years, and you had received many, many notices from them, they might freeze your checking account. But that's going to be way down the line, and you will have several years worth of notices before that happens.
Oh, thank you. Melanie, I was also wondering about, for educators, because we have teachers that are kind of joining us, if there are any other credits or deductions, just as they're doing their own taxes, and thinking about putting their tax returns together, with educators, if there's anything that they should know and related to just credits or deductions.
Well, specifically for educators, what you would see is, let me see if I can get back to this screen, these adjustments to income, where, let's see, adjustments to income, this line 10 right here from Schedule 1, line 26. It's on Schedule 1 where you do put in the educator expenses, you know, K through 12 classroom expenses or sanitizing wipes, you know, paper towels, all of that stuff can be deducted up to $300 per teacher. So if you have two spouses who are teachers, then it would be $600 per return. Or if just one is a teacher, it would be $300. That's up from the $250 that it used to be. So that's the only thing I would say about educators, that's specific to their returns. You know, of course, if you, and I know everybody does spend more than that $300, but any excess that you spend over that is not currently deductible under the Tax Cuts and Jobs Act. Now, after 2025, that excess, if miscellaneous itemized deductions do become deductible again, you might be able to deduct it there, but right now you really are limited to that $300.
So we have a question in chat and it reads, does a teacher have to produce receipts for the educator adjustments? And I was thinking the same thing.
No. When you go to prepare your tax return, you know, your tax return preparer does not have to audit your records. So if you say you spent $300, they'll believe you likely because everybody knows that teachers spend more than $300 of their own money on their classroom. So you don't have to have receipts to prepare your tax return. Now, in the unlikely event that that is ever questioned through an audit, you might have to produce receipts, but that's highly doubtful because everybody knows educators spend more than $300.
All right. Thank you for that.
You're welcome. Okay. So Brad just said if I could tell you a little bit about my path before I get to these helpful hints. You know, I started out, I'm a first generation college student. And so my dad, the next door neighbor, was an accountant for Arthur Andersen in Chattanooga. So my dad wanted me to be a CPA as well. I took the path of being a tax return preparer, a tax professional. A lot of what you do as a tax preparer, you don't really do a lot of preparing of tax returns, but there's a lot of research that you do. Now, you do have to understand the tax return in order to be able to do research effectively. But we do a lot of research when you're a CPA on the tax side of things. So then my dad, after I did that, he wanted to know what was the highest degree I could get, because I guess he felt like without having a college degree, he was always limited and he didn't want me to be that way. So I had to ask my teachers. I said, what's the highest degree you can get? And they told me a PhD. So he said, well, okay, I want you to go get that. So after 3.5 years of practical experience at Arthur Andersen, I did go back and get my PhD. Then I taught at University of South Florida. I'm right out of the PhD program. Then I went to University of Tennessee at Chattanooga. I'm still teaching tax for 17 years, and then just was looking for something different, a program that had an actual Master's of Tax program. And that's how I landed up here at University of Akron. And I really do like it. So that's sort of my background and how I got involved in tax. I've always been part of the VITA Tax Clinic, where we prepare tax returns for the public at no cost, which I'm going to show you the flyer on that, these local VITA sites. Now, since I've been at University of Akron, we're somewhat limited, so we only do tax returns for non-resident alien students. But the other sites I will show you actually do just regular 1040 tax returns. But other things that I wanted to show you for helpful resources is the University of Akron College of Business has a summer leadership program, and this is for incoming freshmen. Let me see if I can get to a different screen. Okay, it's called the Summer Leadership Academy. And so this is for incoming freshmen. There's no cost. They do get 2 courses, 2 3-hour courses, so 6 hours of college credit, a free laptop, and it's for 15 to 20 spots at the University of Akron College of Business. So they have to be a business major. So the business majors are accounting, finance, management, marketing, and economics. And so who should apply for this is first generation college students, students from represented groups, students of color, students with a disability, LGBTQ, etc. Students who are interested in getting an early start on required business courses with extra tutoring support, and students who don't have any prior high school leadership. So this is even meant for students who maybe never thought they were going to college. That's who we kind of want to target with this Summer Leadership Institute. It runs from July 8th to August 9th. They actually live on campus. They take 2 college courses, participate in a lot of professional development activities, and visit nearby companies and sort of get started on looking at internships. Because believe it or not, employers want to get students now starting in the sophomore and junior year rather than waiting until their senior year for internships. There's no cost to participate, and they earn college credits. So they do have to be accepting. Okay, they do have to be admitted. I think they have to be admitted first year students into the College of Business. So the application session is now open. If you go to the University of Akron website and type in Summer Leadership Academy, you'll see how to get more information, and teachers are encouraged to fill out that form and get more information on that. So that's one thing. And it has a lot of videos and, comments from other students who participated last year. So that's one really good thing. And we're giving extra tutoring sort of to bridge that gap for these underrepresented students from high school to college. So that's the goal of that. Another thing that's under construction right now is to have, instead of for incoming freshmen, for rising juniors and seniors, a 2.5-day program to introduce them to college life and life at University of Akron. Now, hopefully that will be up and running this summer, but you can always email me or email my department head who's in charge of that. Her email is jbb14. That's jbb14 at uakron.edu. And her name is Jules, Jules. So, she was telling me about that the other day. So they're working on that. So we definitely want to help these students make the transition from high school to college. And then the other thing I wanted to show you is the VITA site. Let me see. Gosh, and I had to open that up just so I would be ready to go, and it never is. The VITA sites where students and definitely parents can go to have their tax returns prepared for free. So let me see if I can just find that real quickly, since we still have a couple of minutes. Okay, here it is. Okay. So here it's the Community Akron Summit Earned Income Tax Program. And so there are locations at the Community Akron Center on 670 West Exchange Street. University of Akron, I said we do non-resident returns only. There's Ohio Means Jobs. Kent State does both regular 1040s and international returns. And then there's a Community Action Akron Summit. That's a mobile preparation site as well. And then there's a super refund walk-in Saturday, which is February 10th from 9:30 to 3 o'clock at 670 West Exchange Street. So you can maybe print this out and hang this up in your classroom for students to see, or maybe to take a picture of and take home to their parents, because we really want to try to get these people, all these taxpayers in this area, to not pay to have their tax returns prepared. Okay. Let's see. Does anybody have any questions for me? We're finished about 15 minutes early.
I do have 2 comments and 2 questions.
Okay.
The comment is I made a mistake on a tax reform return once, because I was filling them in for my children, and I assumed that because they had become too old for the eligibility for one of the credits that you were talking about, that I marked it wrong. And I went through the same thing that what you suggested that you went through, that I had to then for the next year go through the process of trying to have both forms corrected to be able to claim the child instead of not claim the child. So that was a big mistake.
Right. That's one of the biggest things you want to address when you're doing, a student's tax return, is who can claim the child as a dependent. I really can't overstate that enough.
I also wanted to comment that at the Summer Institute that Brad had hosted for teachers of financial literacy this past year, there was a table, there was an organization that was advertising for the VITA site. So I think that that's good. It's getting out there and more people are seeing it. So.
Okay, good. Yes. There's no reason for people to pay $200 or $300 to have their tax returns prepared, especially when they can't afford it,
So here are my 2 questions. The one has to do with using an online form and doing it yourself.
Right.
I've traditionally used TurboTax a lot. I like the IRS ones for the easier tax forms that I'm already comfortable with. My question has to do with the updating of the sites like a TurboTax. I usually rely on them to ask me all of the questions of any changes that have happened in the tax code. And so I guess I want to be assured that they update their questions enough that I'm not missing something that I might be eligible for.
Absolutely. That's a great question. And I can tell you they spend a lot of time and money making sure they are up to date. So you don't have to worry about that at all. You just would have to worry about, a typo error or entering a W-2 twice or something like that. But those websites, you can trust them to be up to date with the latest information.
Yeah. Well, which is good. I mean, those don't turn out to be free in the long run, because
I know if you're over certain income, they're not free.
And then also they advertise lots of things that make it beneficial to expedite a return, or do you want to go ahead and file Ohio while you're at it? Those kinds of things, which are extra charges. But nonetheless, you can make that decision as you're using it. The last question I have has to do with educator resources for simulations. In other words, I've brought in 1040 forms, I've brought in samples of W-2s, things like that, had students work on them. I wondered, and I don't know that you're necessarily in high schools working with financial literacy teachers, but since some of us are online for that reason, do you know of some good simulators that are online that could walk students through this process instead of just tell them or show them what the process is?
When I do simulations, I have to make mine up every year or every semester. So I don't know of any resources that would provide you with the simulations, or, you know, actually would walk through the process. I'm sorry about that. I had hoped I would find something online when I was doing some research for this presentation, but I just didn't find anything like that. So, you know, go ahead.
I'm sorry, I didn't want to interrupt. I just want to say that the teachers at our school have used some of the things that we've learned at some of Brad's summer institutes, Next Gen Personal Finance and various ones like that. And they do have some stuff inside their curriculum. But you have to work your way through a lot of it to be able to get to tools that I think are user friendly, is what I'm saying, you know. So I wondered if there was something that was better. Some of them do have things like that, but they might have you simply read some information off a W-2 in this assignment and then fill in the W-4 in a different assignment, and then you know, do things like that. And so it's a little clumsy for high school teachers, but hopefully that stuff's getting better. Thank you.
You're welcome.
Melanie, I was actually wondering if you could talk a little bit more about tax refund. There's been a lot of advertising around advanced financial products around advanced loans for refunds that agencies make available. I was wondering if maybe you could talk about that a little bit more for students and for maybe low-income families, where sometimes they see these agencies that are offering this financial product where they can get an advance on their income tax return.
Okay, so I'm sorry, I forgot about that, Brad. I remember you telling me that you wanted me to touch on that, but in my personal opinion, those sort of advanced loan products should be completely illegal, because if you know you're getting your money, say you're normally going to get $3,000. If you do direct deposit, you're going to get that within a week. If you get it through a refund check, you're going to get that within 3 weeks. But if you go into, like, you know, ABC tax preparation service, and they want to say, okay, we'll go ahead and give you $2,800 now, and then we'll keep your $3,000 refund. If you do the math on that, that's charging you an interest rate of like 500%. I don't know how they get around the usury laws for that, but I can tell you that in my opinion, you know, you should always steer clear of those advanced refund sort of schemes, because they are schemes. They charge an outlandish finance fee for that. Now, I'm not going to say there's never a reason to do that. I can't think of one right now. You know, let's say my daughter, who's an archaeologist, so she travels to all these weird countries all the time. If somebody kidnapped her and I needed the money right today, then that might be a situation where I would go ahead and do that. But otherwise, there's nothing wrong with waiting 3 days or 3 weeks to get your extra $200. So please steer your students away from those products. Anything else for me? Okay, well, please know that I'm always interested in coming to your classrooms and doing a presentation on whatever topic you want it to be about. If you wanted me to create a little tax return problem where I came and walked the students through hand preparing one of those, you know, I just can't think of one that would allow me to go in and do one electronically using software that's a practice one. I wondered about that, but I can't find anything like that. But if you want me to come in and talk about tax or accounting or just, anything about finance. I could probably do that too. I probably can't talk about derivatives, but, most any general thing that your high school students would want to know about finance, especially retirement savings. I'm a big proponent of that, starting early. So, I'm happy to do that anytime.
Melanie, we are so thankful for you joining us today. It's the first, I know it's the first week of classes at the university, and you are spinning so many plates, especially in the height of tax season. Things are starting to move forward. So just can't thank you enough. Hopefully, folks, you feel a little bit more informed, you feel a little bit more confident, and you can impart that with the students that you're working with this semester. I'm just going to go ahead and share my screen real quick because I want to point out just a few things kind of in closing. One, just a reminder, this is the disclaimer that the Barker Center, its affiliates, we do not provide tax, legal, financial advice. Everything for today has just been informational purposes. It's not intended to replace your financial advisor, and that it should not be relied on for tax, legal, financial, accounting services. So please make sure that you reference you talk with your tax specialists, your financial advisors, wealth managers in making good decisions for you. I think it was Steve who had asked about additional teaching resources on the topic. There are a lot of curriculum that are out there. The IRS itself actually has a curriculum called Understanding Taxes, and there's a really cool simulation that they have where you get to choose through, I think it's like one of like 30, 35 different people, different avatars you click on, and then you get to see their W-4, their W-2, kind of in preparation for them in putting together their taxes. That's been a favorite of teachers, but then a lot of other resources from Next Gen Personal Finance, from the Council Financial Protection Bureau has a wonderful curriculum. But we'll share some resources with you after today. We'll send this out via email, and you'll have these additional resources to kind of reference, along with Dr. McCoskey's email for those of you that may want to reach out and have her come to your class. What an invite to maybe keep the conversation going. Just in closing, I was going to say that for those of you that are interested in picking up a contact hour certificate, we do have those at the Barker Center. You can get those online. Maybe Addison, I can get you to just put the Barker Center URL in the chat room, and that we can issue that certificate and archive it for your school district in case you need to reference it in the future. Proceeds from that, they actually help support the center, which is really wonderful. Also need to make a pitch for the next teacher training we have on using children's literature to teach economics. The Three Little Pigs have so many things to tell us about good economic financial decision making. That's going to take place on March 13th over Zoom, and it's free again. We hope to see some of you join us for that teacher training. Also, want to get the dates on your calendar for this summer. We have our statewide Financial Literacy Institute for K-12 teachers scheduled for July 8th, 9th, and 10th. It's a 3-day institute. Day 3 is going to take place at the Federal Reserve Bank in Cleveland, Ohio. We get this VIP access into the Fed and all the really wonderful resources they have. But day 1 and 2 will be here at the University of Akron, beautiful Akron, Ohio. We're all thinking about summer right now, I'm sure, with the sunshine, blue skies, but want to kind of get that on your radar for those of you that are putting those professional development requests to your district. That's always summer institutes conferences are always really, really exciting. Also, we'll be those of you interested in picking up that Ohio Educator Licensure Validation, which has just come to life in the state of Ohio. 2 pathways to do that through the Barker Center. One, just come to our Summer Institute We'll have a clinic for educators to help prepare them for the state exam that they need to pass in order to pick up that license, that credential. And then also in the fall, we'll be rolling out our online course to help educators pick up that credential. So really excited about those opportunities that we're going to be offering for teachers.
And speaking about opportunities for teachers, that's what we specialize in. So we have our information posted on the screen. We're at Zook Hall at the University of Akron at Suite 401 if you would like to visit. And our email and phone number, we would love to get in contact with you guys. Obviously, we're here for educators. So if you guys want to contact us, feel more than inclined. We also have a social media presence. So if you have a phone right now, I personally will post events. I can get in touch with you guys. You guys can get your hands on resources. I just posted on the story about fun things you can do free in Akron. And there's a QR code to join the newsletter. You'd get emails. If you're an email person over a social media person, you'll get emails about said upcoming events. And the website, I know you guys are always looking for ways to get your hands on resources. We do have a digital library that we keep up to date, so you guys can get your hands on stuff to help you out in the classroom. And yeah, I just wanted to thank our speaker, Dr. Melanie. Thank you. And thank all you guys for showing up today. It was very enjoyable. So thank you guys. I appreciate that. Oh, and there was a question in chat. Are all these documents on the Barker Center link? So we are currently recording this right now, and we like to add things to the digital library so that you guys can use either seminars, things like resources. But the URL that I posted in chat with the that has the simulations, I'm uncertain. Brad, do you know if that would be?
Yeah, thank you. Thanks. Great question. So we're actually recording this that we'll be able to hopefully get up in our library here in the next maybe the next week for folks that would like to reference back to it. Also, expect a follow-up email from us. In that email, you're going to get a link to our slide deck along with additional resources that were referenced in tonight's presentation, so that you'll have that available to you. And then also you'll have a short survey that we'll send out as well as we continue to try to best meet the needs of Ohio's teachers in teaching finance and economics.
So Kevin, for your question about the events, yes, they're all posted on the website. There's descriptions of the upcoming events. If you would like to put your focus on one thing over something else, and you can register directly from our website. No problem. Thank you for saying thank you. I appreciate that. Does anybody else have any more questions?
All right. Thank you, everybody. Dr. McCoskey, we appreciate it. Thank you so much. Be safe, stay warm, and we'll see you around the corner at the next event. Take care, everybody.
Take care. Bye.